Hello and welcome. We're with a Here in Business today. I'm Abha Bakaya. Here are the day's top stories. Indian stock markets rally 1% to hit record highs. Sensex breaches 64,000. NIFTY crosses 19,000. 12 of the 13 major sectoral indices in the green. Rajiv Jain-owned GQG Partners raises its bets on the Adani Group, joins other investors in buying $1 billion worth of Adani stocks as part of its third round. Adani Enterprises jumps nearly 5% in trade. Huge Ghar Wapasi for SGS NIFTY from next Monday to be rebranded as Gift NIFTY. F&O contracts can be traded for 21 hours. You'll also be able to buy American blue chips in rupees. IPO market red hot with two issues currently open. Idea Forge retail portion subscribed nearly 65 times. Grey market expects listing gains of a massive 80%. Scient IPO not too far behind with a 42% listing gain premium. Tomato prices to cool off in the next week. Consumer Affairs Secretary tells BTTV in an exclusive chat. Also talks of how AI is being used to handle consumer complaints. The NIFTY and Sensex broke through all ceilings today to touch new record highs. The Sensex crossed 64,000 for the first time and closed up just shy of 500 points. The NIFTY breached 19,000 for the first time and touched 19,011, but retreated later to close up 155 points at 18,972. With indices rising for the third straight session, investors are richer by 3 lakh crore rupees. I'm joined by veteran market analyst Devan Choksi to discuss the future path for D Street. Devan, we were anticipating and really waiting for these levels to kick in. Markets have not disappointed. Where to from here?
Well, I think Abha, this is right. Market has been expecting the newer highs, and this time around the rise has been fueled by the participation of HDFC Bank into the rally. Up till now, this heavyweight stock has remained absent in participating into the market. And now that I think the stock has moved up due to the merger confirmation news of HDFC with HDFC Bank, it has possibly resulted also in influencing the other banking stocks to participate simultaneously because the weight balancing had to be done. So obviously, along with HDFC Bank, we are seeing the participation elsewhere also in the banking space. Not completely surprised with this particular rally, largely because of the fact that the underlying fundamentals of the market have remained practically very strong. If the month of April, May and partly June has remained largely favorable to the mid caps where people have made a lot of money, I would think that this money is now being shifted to the large cap stocks who have remained on sidelines in the last 2 months. So to a greater extent, I think it's a rotation which has started happening, wherein people are booking profits from mid caps, putting money into large caps. Second point, as I mentioned, the larger amount of focus has started happening into the banking, where I think the HDFC Bank is leading the pack for obvious reasons. And third most important aspect, the government is spending money, which is now materializing into the larger projects. And this being the last year ahead of central election, in my viewpoint, I think maximum efforts and thrust would be on spending money in the economy and keep economy vibrant and buoyant. So all in all put together, it has also started attracting a lot of investment interest from overseas market. Today, Goldman Sachs CEO interview suggests that I think he is wanting to bring a lot of money into the country through his banking activities. So all in all put together, I think the market is taking the wind out of all the positive news and where we are seeing the rally happening.
Absolutely. Devan, there's been a huge surge also in sort of interest when it comes to metal, power, oil and gas, that entire pocket of the market. Is that, because valuations are looking attractive? Is it looking fundamentally attractive as well? What, according to you, is working for that particular segment of the market?
So the demand side scenario is unquestionably remaining very, very strong in the entire commodity space, metal space as well.
Yeah.
Fortunately, with the controlled prices on the energy side, I think the earlier cloud which were there pertaining to the margin and people were suspecting margin abilities. I think this particular situation is now under control. So along with the demand in the commodity metal, we are also going to see the margin maintained, and as a result of which profits also grow along with the revenue. So that's where probably I think the participation has started happening. And partly you are right that many of the public sector or oil marketing companies have been languishing as far as I think their valuations are concerned. So maybe at a newer high in the market, those companies are catching up on the valuation as well. So I would say there is nothing changing as far as the fundamental is concerned. Maybe I think people are wanting to buy something which is not participated, and at the same time while value, they are available comparatively cheap than otherwise.
All right. Devan, thanks so much for joining us. Great to get a perspective on how things stand, and exciting day for markets. Positive momentum expected to continue there. Rajiv Jain-owned GQG Partners has made a third round of investments in Adani Enterprises. GQG, along with the IHC Group and other investors, bought around $1 billion worth of Adani Enterprises stocks this morning. A block deal of 18 million shares was reported in Adani Enterprises, while 35 million shares of Adani Green also changed hands this morning. GQG Partners had invested around $2.3 billion in the group in two earlier investment rounds. While Adani Enterprises also rose today, Adani Green was also very much reacting to the news. You'll soon be able to buy blue-chip American stocks in rupees. GIFT City NSE IFSC has received approval to trade receipts of 50 US stocks. Initially, the exchange will start trading in 8 counters: Alphabet, Amazon, Tesla, Meta, Microsoft, Netflix, Apple and Walmart. Eventually, other big companies like Berkshire Hathaway, MasterCard, JP Morgan Chase, Morgan Stanley, Nike, PayPal, PepsiCo and Pfizer, as well as Intel, will be joining the GIFT City platform for trading. For more on this, we're joined by my colleague Sakshi Batra. Sakshi, how will this work? Explain the procedure in brief.
Well, that's right, Abha. Well, investing in international stocks has actually become a very popular way for Indian investors to now diversify their investment portfolios. Earlier, we had just about 2 options to invest in the US equities, and that's through a US registered broker or through international mutual funds that invest in these foreign companies. But now we will have a third option of investing in the top US stocks, and that is via the NSE IFSC, or the International Financial Service Center Exchange. At present, one can really buy 8 US stocks on the NSE IFSC exchange, and these are Alphabet, that's Google, Amazon, Meta Platforms, that's Facebook, Netflix, Apple, Walmart, Tesla and Microsoft. And this number is expected to increase to about 50 US stocks very soon that will be introduced on the exchange in a phased manner. Now, to trade or to buy these stocks, one will have to create a new demat account. The existing demat account for trading domestic shares will not be enough, and one will really have to open this special demat account with an IFSC registered broker, that is. And then one will have to link the bank accounts with this demat account, then transfer the funds from the Indian bank account to this account of the IFSC registered broker, who will then convert your funds into dollars to make the investments into these US stocks. Now, investors won't get direct US stocks of the company, but instead they will be issued depository receipts, which are financial instruments that actually represent an equity stock listed on the foreign exchange. That's how it will be processed.
Sakshi, the SGX NIFTY is also being moved to GIFT City from Monday. Do you have details on the changes?
Absolutely, Abha. The popular SGX NIFTY will now cease operations at the Singapore exchange after this Friday, and come July the 3rd, Indian investors will now track early market indicators from the NSE International Exchange at the GIFT City of Gujarat, and SGX NIFTY will now be rebranded as GIFT NIFTY. And all the SGX orders will now be completely transferred to the GIFT City as well as the NSE IFSC exchange. As for the timings, remember at present the trading hours of the SGX NIFTY are up to about 16 hours. Now, on the GIFT NIFTY, the trading hours will be about 21 hours, which will be spread between 2 different sessions. The first session of 9 hours starting at 6:30 a.m. ending at 3:30 p.m. After a break, the second 12-hour-long session will begin at 3:45 p.m. IST and then will continue until 2 hours and 45 minutes IST the next day. And this will overlap with the trading hours of all the key global markets, say in Asia, in Europe and in the US as well. Now, while nothing changes for the international players here, earlier they were routing the orders through the Singapore exchange. Matching used to happen in the Singapore exchange. Now all of the matching is likely to shift to GIFT Nifty. But effectively, we are actually looking at the broadening of liquidity, increasing volumes of transactions back home with us. While the Nifty futures in India have an open interest of close to about $2 billion, Singapore exchange has an open interest of close to $10 billion. And that is something that we are basically bringing on shore with us. And that is likely to improve the volatility and the liquidity back home.
Thanks, Sakshi. The IPO market is red hot with 2 currently open and 1 set to open on Friday. The IPO of Idea Forge Technology has been subscribed more than 50 times at the end of day 3. The 567 crore rupee IPO is closing Friday. Its retail portion has been subscribed a whopping 64 times. According to reports, there's an 80% grey market premium on the share. The other IPO, which is currently open, is of Cyient DLM. The issue has been subscribed 7.6 times. The 592 crore rupee IPO also closes Friday. Its retail portion has been subscribed 24 times. And the grey market premium on this one is at around 42%. As tomato prices spiral across the country, the government is keeping a watchful eye. Speaking exclusively with Business Today TV's Chetan Bhutani, Rohit Kumar Singh, Secretary, Department of Consumer Affairs, said that the prices of the vegetable will cool off in the next 7 to 8 days. He also talked about how AI is being used by the ministry to tackle consumer complaints.
Tomato is a highly perishable commodity, and it has issues pertaining to storage, transportation, and especially if there is a sudden weather disturbance in terms of, sudden rain or sudden spell of heat, the crop gets affected. So that is what happened. There's also an issue of seasonality. Every year at this time of the year, prices are generally higher than the remaining part of the year. So we are watchful of what is happening around the country. Delhi prices will cool down because supplies from 2 districts in Himachal Pradesh, Sirmaur and Solan, will start coming and prices will cool down. Similar things will happen in other smaller geographies. So this is just a temporary phenomenon, and hopefully in 7-8 days you will see a declining trend.
Could you give us an update on the status of pulses and edible oil? Are the prices being stable? In fact, in a recent announcement on tur dal was also done. Could you give us a highlight on that, sir?
So primarily there are 5 pulses which are eaten in the country. Chana prices are low. They are in the range of 70 rupees, and we also going to convert some chana that is available in the buffer to dal, so the prices will further come down. Masoor prices are also low because India saw good production, and also crops in Canada and Australia from where we import have been very good. So Masoor, which is lentil, prices are also down. Moong, there was a temporary rise, but now it has, because the crops have been good. MP has been the big producer of moong, so moong prices are also stable. The only problem was in tur and urad, but you'll be happy to know that 2-3 days back, the Burmese prices have also crashed because of the good rains here. Some people in Burma were speculating that if India doesn't have a good crop, they can hold on to it and speculate. But when they saw the pattern here, so it crashed by about $100 a ton day before yesterday. And government has also decided to release stocks from its buffer. So both these factors combined, we'll see a downward trend in tur prices.
Could you give us a sense on how AI is being used by the ministry to ensure consumer complaints are addressed faster and, of course, in a more credible manner?
So AI is being used at 2 places. One is the interface where the consumer is filing the complaint. So we are developing a bot where the process of filing a complaint becomes easier, faster and intelligent by giving appropriate prompt to the guy who's filing the complaint. That is number 1. Number 2 is when you have a set of complaints and cases which are there in our database, we run analytics through it and try and pick up which sectors are there where consumers are filing more cases. And then we have a debate with the stakeholders of that sector as to how to reduce those pain points so that the case can be, this is more in the nature of preventive. For example, at the moment India has about 5.5 lakh cases, consumer cases in all our about 700 courts across the country. So we ran an analytics and we found that 1/3 of these cases pertain to insurance.
Okay.
So we called all the stakeholders from insurance sector, including the Department of Financial Services representatives, and we sat for a day and identified as to why so many consumers are coming to consumer courts for insurance-related complaints, and then identified a few things. By addressing those, this number of complaints could itself be reduced.
And so when are we seeing an official launch for this particular bot from artificial intelligence from the ministry? Is it still at a trial phase or pilot phase, or do you have a timeline in mind, sir?
So it's and we don't want to launch it in a premature stage, because AI is a double-edged thing. I mean, you don't want it to go wrong. So as is true for all large language models and similar generative AI, we need to train it on a lot of data before you launch it formally. So it might take a couple of more months.
The influencers with respect to the health sector and the financial sector are having a good time right now, especially on social media, giving advices as far as the financial benefits are concerned, financial gains are concerned through stock markets. SEBI has also multiple times issued various advisories. So are you what steps are you undertaking to ensure these two particular subjects are taken care of?
So you're right. Influencers is the new economy, especially with young people. So first of all, let me make it clear, we don't want to become an impediment in that sector of the economy. A lot of young people are making money there, and the size of this sector is about 2,500 crore already. So we don't want to get in the path of that. But however, since it affects the consumer, we want to caution them that they need to disclose. So if you are endorsing a product and you have 10 lakh followers, and you have taken money or a material benefit to endorse the product, then you need to disclose. See, on television and newspapers and other media, it is clear that this thing is an advertisement. But when somebody is doing a social media post, it is not clear whether it's their honest opinion or whether it's a paid endorsement. So our guidelines pertain to disclosure only, that you disclose what is your connect. If it's an honest opinion of a consumer, say that. But if you have taken money, please do disclose that, so that the consumers who are watching that reel should take it appropriately in that context.
Byju is in the news again, and for all the wrong reasons. Business Today TV has it from sources that amid growing troubles and setbacks, the EdTech company has deferred the employment offer letters for incoming employees. The company confirmed this development. Our correspondent Akanksha Chaturvedi is the one who broke the story. She's joining us for more on this. Akanksha, tell us what's happening at Byju's right now.
Well, that is right. Byju has deferred the employment offer letters of incoming employees by up to 6 months. This is what we've learned from our sources. A Byju spokesperson confirmed this and said that this change was made due to a part of the company's phased hiring strategy. The EdTech company has been facing a lot of heat lately due to multiple reasons. Several employees claimed that the EdTech company had not been paying Provident Fund dues to EPFO, which it had been collecting from the employees. The EPFO started an investigation into the company earlier this week. Moreover, Byju's auditor Deloitte resigned last week, citing the significant impact on its ability to audit the company due to the EdTech company's failure to provide financial data despite repeated requests of the auditor. Furthermore, G.V. Ravishankar of Peak 15, erstwhile Sequoia India, Vivian Boo of Chan Zuckerberg Initiative and Russell Dresenstock of ProSUS exited the company's board last week, marking resignations of half of the company's board of directors, which is 3 out of 6. After these high-profile exits, only Byju Ravindran, Riju Ravindran and Divya Gokulnath are left on the company board. What's going to happen? We don't have any clarity on it yet. Back to you, Abha.
That's where we leave it on the show tonight. Thanks for watching.